Hello, good afternoon. You've tuned into your stocks on CNBC-TV18. I'm Vinny Motiwala in the Mumbai studio. A look at the markets, we're seeing that green continuing for the market. A sharp recovery for the Nifty as well as the Sensex from the day's lowest point. Nifty has recovered more than 500 points. Look at the Nifty as of now. 24,700 and above that mark is what the Nifty is trading at. 0.7% of gain. Day's highest point for the Nifty. Sensex 2 is holding on to same gains, strong gains that is coming in for the Nifty as well as the Sensex. Let's pull up the broader markets because that was trading in the red also last time I checked. It was underperforming the benchmark indices. As of now, yes, recovered from the day's lowest point, but nonetheless, we're seeing that the broader markets, the mid cap and the small cap, is underperforming the benchmark indices. Nifty Bank, what's that doing? Has that come in the green at one point of time? Seems like it's seen Nifty Bank also recovered from the day's lowest point, and a 1,000-point recovery was what the Nifty Bank was also seeing. So Nifty Bank is what we want to talk about. Private bank surely seeing a recovery. Nifty Bank also seeing a very sharp recovery. 0.4% of gain is what the Nifty Bank is holding on to. But yes, that's a sharp recovery that we're seeing coming in the market. Couple of stocks that I just want to mention that have suddenly jumped up. One is Westlife Food World. Let's pull that up. And Jubilant Foodworks in the QSR space. We're seeing this buzzing in trade as well. Westlife Food World specifically has seen a sharp jump up in the last couple of hours. So keep an eye out on that one. But a good afternoon surely coming in for the markets. But this is a show where we will be solving all your stock-related queries. And for that, we have our experts for today. Independent market expert Shahina Mukadam joining in with us, as well as Vaishali Parekh, Head of Technicals and Research at Prabhudas Lilladher this afternoon. Good afternoon, ladies. Thank you so much for joining in with us. Vaishali, it's such a nice day that I have to ask you, what are we looking at in terms of levels for the market, whether you look at the Nifty as well as the Nifty Bank? Because, post-12, we've seen that recovery coming in, and that good recovery seems like continuing at least so far. Touch wood, and hoping that it continues in the next 1.5 hours as well. But technically, how is it looking like?
Very good afternoon, ladies. Yes, surely, Vinny, as you rightly said, market is really showing us a yo-yo movement. So today, of course, we were, as the day began, we thought the support levels of 24,000 should not be under threat. And we saw a low of 24,180, and from there on, we have seen a good bounce. So now the texture of the market has totally changed, and so is the case with Bank Nifty, though it's a bit of a laggard today as compared to Nifty. I would say Nifty needs to sustain about 24,800. And if that is so, then we would be looking at further higher targets of 25,200 to start with. And likewise, Bank Nifty, of course, we are seeing a bounce back. We saw an erosion of 1,000 points, and from there on, again, we are back in the green. So I would say 53,800 needs to be crossed in this as well to look for 54,500 and so on.
Okay, keeping an eye out on those levels over there for Nifty as well as Nifty Bank. Thanks for that, Vaishali. But let's move on and get started with all those stock-related queries then. And the first query is on Tata Consumers today from the FMCG pack. We have Ismail Memon, who's writing to us from New Delhi. He says that he wants to invest 1 lakh rupees in Tata Consumers and asks whether it is advisable to invest at the current market price, or maybe wait out before you look at Tata Consumers. Shahina, on the fundamentals, how is Tata Consumers looking like? Is it a good bet to make as of now, or what is the word coming in on this one? And good afternoon.
Good afternoon. What I would say is that while it's a good company to be invested in the longer term, and FMCG is coming back on the buying list, I would still prefer that if you want to make a decent profit of about 15 to 20% on an annualized basis, it is better to wait and buy it on any dip. Basically, the reason being that the growth, is still to pick up in a bigger way. It's still growing in just about 5% in terms of revenue. Margins, while maintained, they are taking some non-recurring item hits on the profitability. Interest rates have, the interest actually expense has gone up because of the acquisitions it did last year. So I think all these things put together, profits will be subdued. It is better to wait. I would prefer buying it at lower levels, closer to about 850.
Okay, maybe wait out and buy at lower levels around 800, 850 is what Shahina has said. Plus, obviously, that FMCG has seen a bit of a subduedness and slowdown. So let's wait out for that is what she's highlighting. Vaishali, on the charts, Tata Consumers, how is that looking? Last 6 months, we've surely seen that fall coming in. Would you also say maybe wait out for the levels that Shahina was also mentioning? Or maybe now one can start accumulating this since the viewer wants to invest 1 lakh rupees. So maybe start accumulating at every dip possible.
So I would definitely agree on accumulation, but technically also, as what Shahina said, the technical support comes at 870. But sometimes it so happens that not necessary that we touch the support levels, and if there is some inherent strength, the stock is likely to bounce back. So I would say at this juncture, when we are looking at a long-term perspective, and if we are looking at a target of around 1100 to 1150, I would say accumulate, because the downside risk is 870. I mean, so I would say from here on, accumulate it every day.
Okay, from here on, accumulated every day. That's the word coming in. Keep an eye out on those levels there. Let's move on to the next stock for today. We have the next query on Inox Wind. We have Samik Mohapatra, who's writing to us from Mumbai, holding 1,300 shares of Inox Wind at a price of 220 rupees per share. Currently making some bit of a loss. The stock is trading at 196 rupees. Wants to know in the short to medium term, if he's looking as an investor for just a short while, what should he do? Whether he should continue to hold this or look to sell? Shahina, what's your word on Inox Wind?
Well, I would say shorter term, it could just remain soft. In fact, even go a bit down. But I'm personally invested in it, and I believe that in the medium to longer term, it has got a lot of potential. The management has done just about everything good in the last 1 year. It's a turnaround story. So basically, from losses last year, last couple of years, it's moved into profits in the current year. Valuation, so you don't really look at PE and all, because it doesn't make sense. In terms of order book, it's got a good order book position of about 3 gigawatts, and it's in the RE space. It's growing with number of new products that it is launching across the board. So I would say, a long-term investor can remain invested. In fact, I would say at declines, you could add.
Okay, can add a decline. That's the word from China. On the technicals, Vaishali, what's your word for Inox Wind?
So Inox Wind, totally, actually the stock has been in a very good uptrend, and after making the recent high of 250, it has been doing a sideways to a consolidation move. So I would say purely on technical terms, 180 acts as a support, and for this view to continue, that yes, it's got an upward trajectory, 180 needs to sustain. So yes, right now it definitely is a narrow movement, but 180 should be taken as a support to buy or perhaps add. And once this stock moves about 210, I guess it's back on trend, and we may retest the 250 to higher targets.
Okay, keep an eye on those levels over there for Inox Wind as well. Let's move on to the next query. We have Santosh, who's writing to us from Mumbai, holding 2,500 shares of Yes Bank at a price of 26 rupees per share. Wants to know the prospects of us holding medium term and long term prospect. Shahina, Yes Bank, what should the viewer do?
See, Yes Bank on all financial parameters, it is improving. You've had stable NIMs of about 2.4%. Their, net NPA come down to 0.5. They are growing well, both on their loan book as well as deposits. Their CASA ratios improved to 32%. So everything is positive. The only issue is that, a big move, I would say an upside. Downside, I see limited. Upside will come only if there is some clarity as to what is going to happen to SBI's stake in Yes Bank, and who is going to be, the new promoter of the company. So to that extent, I would say it's like a wait and watch. You can really not do anything about it.
Okay, wait and watch. Can't do much about it. Okay. And on the technicals, Yes Bank, Vaishali, what are your thoughts?
So technically, I think the stock has made a bottom at around 819 levels, and currently it's got into a trend. So from here on, 20 should act as a crucial support. View gets negated below 20, and let's wait and watch. It can give you a bounce at least up to 23 to 25. Once you see these levels, we can have a relook for higher targets. But my preference would be, of course, as you know, would be the frontline stocks.
Okay, let's move on and talk about a jeweler. We have Kalyan Jewellers. That's the next query on. And Kunal is writing to us from Chennai. He's holding 250 shares of Kalyan Jewellers, price of 300 rupees per share. Good amount of profit, right? 749 is what the stock is trading at. Wants to know whether he should now continue to hold this or maybe book out his profits. Shahina, what's your word on Kalyan Jewellers? Fundamentally, it doesn't seem like a bad move. But given that the viewer is making good amount of profit, fundamentally, what's your take on this one?
Yeah, so it's a very expensive valued. The valuations are extremely rich for Kalyan Jewellers. So to that extent, I would say you can take some profits off the table. Of course, in terms of business opportunity for the long term, Kalyan Jewellers is now just one of the two all India players in terms of its segment. It is doing pretty well in terms of the revenue growth. But in terms of margins, revenues are growing well because of its franchisee model where it is able to expand stores and add to revenues. But at the same time, this is also impacting the margins. So we are seeing single digit margin or profit growth. So to that extent, valuations for this size of profitability becomes, it's better to book some profits and you can hold the rest for the very long term.
Okay. That's the word on Kalyan Jewellers from Shahina. But on the technicals, Vaishali, Kalyan Jewellers, what should one be doing? The run-up has seen quite good. Like Shahina was also saying, valuations seem a bit rich as well. Technically, what should one be watching out for?
So currently, there is no damage to the trend, and it is just for some time since 3-4 days it's been consolidating. It's a sideways move. So I would say keep 720 as stop loss and continue holding because the way we are looking at the higher projections, I think it can go to 780 to 800. So in my view, keep 720 as stop loss, and I think partial profit booking at 800 levels should be done.
Okay. That's the word on Kalyan Jewellers. But on that note, we're going to slip into a very short break. Don't go anywhere because on the other side, also we'll be taking all your stock-related queries with Vaishali as well as Shahina. Welcome back to Your Stocks on CNBC-TV18. We still have Shahina, Mukadam as well as Vaishali Parekh to solve all your stock-related queries. Let's move on to the next query, ladies. And we have Sundaresan, who's writing to us from Tamil Nadu. He's holding 200 shares of Wipro at a price of rupees 204. And one more stock he wants to ask about is ITC. He's holding 25 shares of ITC at a price of 263 rupees. Wants to know what he should be doing with both these stocks. Shahina, coming to you first.
I would say you can continue holding both the stocks. One is, of course, because both the sectors are now coming back onto the buying list after really not doing too well in the last couple of quarters. In terms of Wipro, I believe valuations are not expensive. What actually has happened is that its second quarter numbers were good, much better than what was expected. But the management guidance for the third quarter has been very subdued. So to that extent, I think, there is not likely to be a very strong up move, but valuations being reasonable, I would still say that you can see a 7 to 10% upside in the shorter term. ITC, of course, again, after having corrected, it started its up move again. And I believe the demerger of the hotel business should happen in the near term. Valuations there also, of course, remain reasonable compared to the rest of the pack. So I would say hold both as of now.
Okay, hold both as of now, Wipro as well as ITC. Vaishali, on the charts and technicals, both these stocks, would you tell the viewer to hold the stock or maybe book out some bit of a profit here?
No, actually, the IT stocks have already been doing very well. So to talk about Wipro, I think one should continue holding because it still has a lot of upside potential. And so is the case with ITC. We have pretty much seen the correction and now it's time for it to move higher. So I would say continue.
Okay, continue holding. Coming in the word for both the stocks from both the experts. Let's move on to the next query. Delta Corp, that's the stock that we'll be talking about. We have PC Chaya who's writing to us from Bangalore. Holding around 100 shares of Delta Corp, purchased at a price of 187 rupees per share, which was almost 2 years ago. But clearly not making a profit right now. Wants to know the outlook of the stock and whether he should continue to hold this or look to sell. Shahina, what's your take on Delta Corp? What should the viewer be doing? Because they're already holding it for a long term. Now, should they just book out their losses?
Yeah, so this becomes a very difficult decision to make because, if you see the last 1 year, the revenues actually came off. The profits also came off, and the stock also corrected substantially in the last 1 year. Now, if you look at it from the current levels, forgetting about the past, all this, of course, was the impact of the GST changes that happened for the segment. And Delta Corp, most of its income is, of course, from the offline gaming. So, to an extent, it has been very badly affected. The Goa business has been affected. Now, going forward, I think there is, it is going to be slow and steady upside from here. So I don't see, I don't see the stock going down from here, but I see it being a steady performer going forward. So if you want, in my view, you can switch at an up at any bounce.
Okay, switch at a bounce. That's what coming in from Shahina. On the technicals, Vaishali, any respite coming in for the viewer, or maybe your view is similar that to Shahina?
I would say now that he's held on for so long and there is a decent amount of loss, wait it out. Keep a stop loss of 115 because the stock would see further weakness if 115 levels are broken on the support side. But on the resistance side, if the stock moves above 130, 132, it could gain further strength and go towards 155 to 160. I guess that is a level which would be acting as a very crucial resistance level. And I think exit at those levels to get into a better stock.
Okay, keep an eye on those levels over there while looking to exit for Delta Corp. Let's move on to the next query. We have Shaktisin Jadeja, who's writing to us from Jamnagar. He's holding 70 shares of Cyient DLM at a price of 647 rupees per share. Currently making just some bit of a profit there, very bare minimum, but for the long term. What should the investor do? Should he continue to hold the stock or maybe look to sell? Your view, Shahina.
See, if the investor is going to hold it for at least 6 months, like at least 2 quarters from here, then it makes sense to hold. Because I think the current quarter, the third quarter and fourth quarter may see some further write-offs that we, because they had made some acquisitions last year. And since listing, the stock has actually remained more or less at the same levels. So I think the cleanup is going to happen in this year also. And FY26, actually, the acquisition that they made will start being earnings accretive. They are a small cap EMS player, so they're in a very good space. They're getting very good orders from defense. So if I was going to hold for 6 months, I would suggest continue to hold. If you're a very short-term investor, you may just see some pain for some more time.
Okay. Vaishali, on the charts, what's the word for Cyient DLM? Because quite a range-bound session that we've seen coming in the last 1 year. Not much of a move, right? 600 to 750, around that mark is what the stock has been moving at. What should the viewer do?
You're very right. Actually, yes. Even on a weekly chart, the stock has only been consolidating. So I would say wait it out. Wait for the stock to move above 740 levels. And if that is so, then I think it would gain strength for 800 to 850. So that is how I would look at. No point exiting at these levels because it's already at a good support level.
Okay, so there is some good support level that is coming in there. That's the word coming in from Vaishali, so continue to hold. Let's move on to the next query. We have the next query on Titagarh Rail Systems. Jagannathan is writing to us from Chennai, holding 250 shares of Titagarh Rail Systems at a price of 1,450 rupees per share. Currently making some bit of a loss here. Wants the suggestion that continue to hold the stock, maybe switch to some other stock in his portfolio in the same sector, other sector. He wants your advice on this. Shahina?
I think in this particular segment of wagons, Titagarh is very well placed. Having said that, I think they had some issues in the first half of the year because orders were not really flowing in. Also, their execution was a bit impacted because of Metro, Vande Bharat trains not really taking off as we had estimated. Going forward, I think things should look better. I think even metal prices are sort of softening. Everything should benefit Titagarh rail wagons. So to that extent, I would suggest continue to hold for the medium to longer term.
Hold for a medium to long term. That's the word coming in from Shahina. But Vaishali, on the charts and technicals, what should the viewer be doing? Continue to hold this or maybe look at some other stock?
I would say it can add more because overall we saw just some days back that rail stocks have got into momentum. We saw good pickup coming in Jupiter Wagon, IRFC, etc. So talking about Titagarh Rail itself, I think the long-term trend is still intact. 1,000 is a very good support level. So if it's for a longer-term perspective, no harm adding more because the risk-reward ratio from here on would be very nice. And once the stock gets back on track, it is very likely to do 1800 levels again.
Okay, keeping an eye out on those levels over there for Titagarh Rail. Thank you so much, Vaishali as well as Shahina. That was the last query for today that we had. So thank you so much for joining in with us as always, and hope you all have a good weekend. With that, it's a wrap on this edition of Your Stocks on CNBC TV18. Remember that you can always email us your queries and we'll address them with our experts. But leaving the Nifty with recovering 500 points from the day's lowest point. Don't go anywhere. Closing bell will take the action forward.